Bitcoin took a dive, but experts aren't worried. From Coinbase teaming up with Shopify to BlackRock's huge Bitcoin prediction, this video rounds up the hottest crypto news. Plus, find out why some analysts think this dip is a golden buying opportunity. Don't miss out. In the latest video from Altcoin Daily, Aaron discusses major crypto news, including Coinbase partnering with Shopify for crypto payments on all Shopify platforms. This impacts 5.5 million stores and potentially 675 million shoppers. The video also covers President Trump's support for stablecoins and crypto market frameworks, BlackRock's prediction of becoming the biggest crypto asset manager by 2030 with over $75 billion currently held in Bitcoin and Ethereum, and a potential Solana ETF approval in 3 to 5 weeks. Additionally, institutional accumulation of Ethereum is accelerating, with ETFs seeing $240 million inflows and a total of $1.25 billion since May 16. The video also mentions several altcoins, including Cardano, Algorand, and C Network, with news about their adoption, treasury management, and growth potential. It's interesting to see how traditional financial giants like BlackRock are increasingly involved in the crypto space. Their optimistic predictions, coupled with increasing institutional investments in Ethereum, suggest a growing belief in the long-term potential of cryptocurrencies. The potential approval of a Solana ETF also adds to the positive sentiment, but it will be important to see how regulators approach this given the recent scrutiny of other crypto projects. The development around Shopify and Coinbase integration for payments is another significant step towards mainstream adoption. I believe the altcoin market shows healthy diversity and innovation. In the latest video from Crypto Rover, Bitcoin's price dipped to $12,000 due to rising global tensions and increased oil prices, now at $75 a barrel. Despite this, strong inflows continue into Ethereum spot ETFs. Crypto Rover believes Bitcoin will likely bounce back from the $10,000 to $11,000 support level and predicts Ethereum could reach $4,000. He mentions a 10% deposit bonus up to $10,000 on the Bitcoin C exchange, accessible via a link in the video description. It's interesting how Crypto Rover connects geopolitical events with market fluctuations. While the correlation between rising oil prices and inflation is generally accepted, the direct impact on cryptocurrencies is still debated. A lot of factors can influence crypto prices, and attributing a drop solely to rising oil prices might be an oversimplification. Also, while past performance isn't indicative of future results, Ethereum's resilience despite the Bitcoin dip is noteworthy. The influx into Ethereum ETFs does suggest growing institutional interest, which could be a positive sign for its long-term prospects. In the latest video from Lark Davis, Bitcoin's price surge past $100,000 is discussed, but the main focus is on why this is just the beginning. He points out major players like 21 Capital, backed by Tether and Bitfinex, haven't even begun deploying their Bitcoin funds. Other big names like MicroStrategy, Strive Asset Management, and Metaplanet are also planning massive Bitcoin purchases, adding to the buying pressure. GameStop's recent crypto move and plans for more Bitcoin acquisition are also mentioned, along with European companies and legislative action in the U.S. Lark emphasizes the growing number of companies using Bitcoin as a treasury asset, decreased Bitcoin volatility, and on-chain signals that don't indicate a market top. He also mentions decreasing Bitcoin supply on exchanges and increased demand from institutional investors, and spot ETFs hitting $70 billion. The video mentions a $5 million FEMX trading competition. While the institutional interest in Bitcoin is undeniable and potentially very bullish, it's important to remember that market cycles do exist. The current landscape is definitely different with corporations involved, but that doesn't eliminate the possibility of corrections. The sheer amount of planned investments mentioned by Lark Davis is certainly exciting, but it's always wise to approach such predictions with cautious optimism. Also, the regulatory environment is constantly evolving, and this could impact Bitcoin's price trajectory. In the latest video from Ben Cowan, he talks about the most recent CPI report, which came in at 2.38%, slightly better than the 2.5% expectation. Even with inflation trending down, the Fed isn't expected to cut rates until September. Ben discusses how inflation continues its downward trend from 3.24% a year ago and 4.13% 2 years ago. He notes that housing and food beverage costs are the biggest contributors to inflation, while other sectors like apparel and transportation are seeing deflation. Core inflation also continues to fall, hitting 2.77% this month. Ben thinks the disinflationary trend will continue, but tariffs could complicate things. He wonders if the Fed's concern about tariffs might delay necessary rate cuts. It's interesting to see how the market reacts to news like this. Even with positive inflation news, the overall market sentiment seems to still be cautious, possibly due to concerns about the economy. This really highlights the complexity of the current economic situation and how different factors can pull the market in opposite directions. In the latest video from Coin Bureau, Guy explains how to use the Axiom DeFi trading terminal. Axiom connects to decentralized exchanges on Solana and beyond, like PumpSwap and Hyperliquid, letting users trade meme coins in perpetual futures. Viewers get a step-by-step guide to signing up, funding accounts, including buying SOL through Coinbase integration, and navigating the platform. The video details Axiom's discovery page for finding tokens, Pulse page for tracking new tokens, and trading terminal. It also explains tracking features for wallets and Twitter, how to trade perpetual futures using Hyperliquid via Axiom, portfolio management, yield generation on USDC, currently at 4% APY, and the platform's fee and reward structure up to 0.25% cashback in SOL. A referral link offers 10% lifetime cashback and a 2x point multiplier. While Axiom looks interesting and offers a bunch of features like the social sentiment tracker, the high concentration of meme coins on Solana raises some red flags for me. The ecosystem's history hasn't been all smooth sailing, and focusing on such volatile assets seems risky. The integration with established platforms like Coinbase and Hyperliquid adds legitimacy, but the overall emphasis on meme coins makes me think twice before diving in. The platform's features and interface seem advanced though, so it might be a useful tool for a very specific set of traders. In the latest video from Crypto's Russ, Bitcoin's price dropped to around $102,800, down $2,000 due to Israel's preemptive strike on Iran. The presenter compared this dip to previous market shakeouts, highlighting a trendline Bitcoin has followed since last year. They predict a bounce back, noting Bitcoin's current price above $100,000 and the oversold RSI on the 4-hour chart. The presenter mentions the futures market looking bad, with Dow down 600 and NASDAQ down 400 points. The video also references CNBC's coverage of the Israel-Iran conflict and the resulting jump in oil prices. The presenter sees this as a good DCA opportunity and suggests further Bitcoin accumulation. While the presenter seems fairly optimistic about Bitcoin rebounding, the geopolitical situation adds a layer of uncertainty. History shows markets can react strongly to such events, and though past dips have seen recoveries, this situation is unique. The connection between Bitcoin and global instability is becoming more apparent, with its price fluctuating in response to international tensions. This makes Bitcoin an interesting asset, but also a very volatile one. In the latest video from Crypto Banter, the host discusses the recent crypto market dip, calling it a panic dump driven by fear, not liquidations. He analyzes Bitcoin and altcoin charts, pointing out support levels and potential price targets. Bitcoin could drop to $97,000 to $99,000, while Solana might see $135. Despite the dip, he remains bullish, predicting Bitcoin will reach $130,000 to $150,000 and Ethereum $3,500 to $4,000. He advises against panic selling and recommends focusing on spot buying and long-term investments until the market shows stronger upward trends. The recent dip in the crypto market seems to align with a general market correction also seen in traditional stocks. Geopolitical events often trigger such reactions, leading to short-term volatility. While the host's optimism is understandable given historical trends, it's important to remember that past performance doesn't guarantee future results. Market sentiment can change swiftly, and external factors can exert significant influence. This situation reinforces the importance of portfolio diversification and risk management.